All right, let's get to our first presenter of the day. That's Andrew Henkel. Andrew is the Senior VP of Brand Growth Solutions for Spins. His unit is one that advises a broad portfolio of high-performing brands and investors on marketing, sales, innovation, and M&A. In his presentation titled A New Wave in Beverage Growth, Andrew will feature an analysis of how natural brands have reshaped the beverage landscape and explore how independent companies are taking advantage of the changing winds through innovation and intelligent business planning. Andrew, come on up to the stage. How are you? Good to see you.
Thanks a lot for everyone who came out this morning. I'm glad that you made it out to the start of day 2. I'm really excited to be here, and I'm particularly excited because, honestly, I think there's not a more exciting time to be working in the beverage space. So it wasn't that long ago, we were all listening to grunge music, and where we were still living in the world of big-scale choices in beverage, where it was only really about taste. People were still very interested in aligning with their cohort in terms of their choices. And the choices that you had in beverage were really just the choices of the big conglomerates. But today we're in a new blossoming new wave of beverage, one that's based on ingredients scrutiny by consumers, one that's where consumers are looking to break from conformity, and one where consumers are interested in this landscape of diverse choices. So it's an exciting time, and these new wave of beverages are really changing the categories that matter. So it used to be that there were only a handful of categories that drove all of beverage, but today, we've moved into this space with more and more categories, which are really the focus of the industry. In fact, when you look at this landscape, and previously when I've spoken about beverages, a lot of times I focus a lot on refreshment beverages, but we've actually taken a look at a much broader swath of beverage, because when you go beyond refreshment beverages into dairy, into plant-based beverages, you have a much broader landscape, and that landscape is about $114 billion, and it's growing a little over 2%. But when you look at some of these dynamic categories like plant-based milk that's growing at almost 10%, these are the categories that are fundamentally changing beverage. And frankly, natural products are at the center of that. So natural products may only be about $12 billion of that $114 billion, but they're growing at a rate of almost 10%. They are the engine of growth in the industry when conventional beverages are basically flat at 1.6% growth. And natural beverages are driving growth across every channel of retail. So one of the things that I find particularly interesting is look at the convenience channel. Convenience has not always been the place that's been the hotbed of natural beverages, but natural beverages are growing at a rate of around 15%. It's the fastest growth rate for natural beverages in any channel is happening in the convenience channel. So even your 7-Elevens and your other convenience outlets are getting on board with the natural shift. And frankly, natural products still hold a small share across a lot of subcategories. The blue on this chart is all the share of conventional beverages by every single one of these categories. And frankly, conventional is still very dominant in a lot of categories. And the other reality is that there are 3 big companies that still hold the majority share of the market. The big names you've always heard: Pepsi, Coke, and now Keurig Dr. Pepper. They are still the majority of the market, but from a results standpoint, they're all, in the best case scenario, growing at about at the rate of the market. And these big CPG players are investing billions into inorganic growth. So they're buying a lot of companies. And you've seen just recently the number of acquisitions that have happened, from Curry Green Mountain and Dr. Pepper coming together, to Coca-Cola investing in Costa Coffee, Coke buying Body Armor, Pepsi investing in SodaStream, et cetera, et cetera. There's tons and tons of money flowing into the market. And the result is that the portfolios of these largest companies are changing sort of quite rapidly. Still, natural products only have less than a 10% share of these big CPG companies' portfolios today. So it's actually quite a small percent of their portfolios today. Their portfolios are still hugely dominated by conventional beverages. In fact, if you take a look at Coca-Cola's portfolio, and I'm not picking on Coca-Cola, I'm just saying Coca-Cola's portfolio, they are actually losing share across all beverage categories. And they are still hugely dominated by conventional beverages. And acquisition doesn't always turn into acceleration. Now, I love Buy and was I'm on board with Buy very early on. But if you look at sort of the trajectory of the brand here, growth has actually not accelerated. What's accelerated is distribution has grown a little bit since acquisition. Number of items has grown quite substantially since acquisition, but growth really hasn't followed. Sure, there's been some growth, but it hasn't been an acceleration of growth after the acquisition. So, big CPG companies are turning to other means. And one of the big things that we've seen lately is the birth of lots of incubators. So incubators are sort of the new thing. Everybody's got an incubator, right? And Coke was on board with this very early on with VEB, and VEB has done a ton of work in this space. But everybody is sort of getting on board with incubators. And one of the things that interests me is the fact that these incubators are investing at incredibly early stages. If you step outside of beverages just for a second, it was interesting to me that PepsiCo invested in Health Warrior, a brand which normally would be the domain of sort of private equity exclusively. But these incubators are enabling CPGs to invest at incredibly early stages. And honestly, the jury is still out on sort of how successful this route is going to be. But it's fundamentally changing the entire investing game. So I think we have to ask ourselves, what's really going on in this space? What's really happening? What's driving this sort of new wave? Because it doesn't look like it's sort of the big scale players that are driving the new wave. And I've sort of focused in on 3 key points that I want to bring up today around what's really driving the new wave in beverage. And I think it's around changes in consumption, choice, and capital. So point 1 is that today's consumers are really portfolio drinkers. So we used to think about sort of repertoire beverage consumption, and today consumers are becoming what I'm going to call sort of portfolio drinkers. The second big thing is that diversity sparks desire. And this isn't a political speech, but this is the reality of beverage consumption today, is that with all the diversity of beverage choices out there, there's a lot of desire and a lot of choices that consumers can go to. And then the third big factor that's happening for this new wave of beverage is that there's more than one bank in town. So there's a lot more capital out there and a lot more choices of capital for people. So you don't have to go to the 3 big beverage players in order to get capital today. There's a lot more choices, a lot more routes to go it alone. So the first point is around consumers are portfolio, not repertoire drinkers. So I asked one of the millennials in our consulting team at Spins to sort of map out her sort of daily beverage consumption. And when I was her age, sort of starting out in my career, to be perfectly honest with you, it was having a coffee in the morning, and then it was a lot of Diet Cokes during the day, back in the whenever that was. And her beverage consumption today is fundamentally different than that. She's consuming a broad range of beverages, from cold brew coffees to kombuchas to electrolyte waters, to yerba mate, to on and on and on. Like, her beverage throughout the day is very driven by this rhythm between sort of going from functional beverages to refreshment beverages to different choices during the day. And honestly, these brands have evolve and change all the time. Because she has this sort of portfolio mechanism, it's very easy for her to switch in and out of lots of different brands, because it's not one consistent thing all the time. It doesn't become sort of mindless. It becomes very choiceful. The second big thing is around sort of diversity. So in the market, since 2015, just in beverage alone, there's been 5,700 different brands that have been sold in the marketplace. On average, across all these individual subcategories of beverage, there's about 205 brands in each one of these spaces. So there's just tons and tons of choice, and this choice is expanding all the time. In fact, what you see is that just over the past several years, versus a year ago, what we've seen is that the share of the top 25 brands has gone down from around 43.4% to 42.2%, and the top 50 brands from 57% down to 56%. Now you say that's not a big deal, but in 1 year, we're getting less concentrated in the industry. But the bigger deal to me is actually on the other side of the chart here, which is the share of dollar growth. So just in the span of 1 year, we've seen the share of dollar growth of the top 25 brands go from around half to around 40%. And the top 50 brands, their share of dollar growth go from around 82% down to around 61%. So that's been a precipitous drop just in 1 year in the dollar growth driven by the top brands. What that means is that we're seeing a lot less concentration in the beverage market today. And with less concentration comes more opportunity for standalone brands. My third point, as I mentioned before, is that there's more than one bank in town. And we've just seen across all of natural, organic, and functional foods, just a rapid rise in the number of M&A transactions over the past several years. And this data is collected by our friends over at Whipstitch Capital. But if you look at beverage alone, within non-alcoholic beverage, this is the number of significant M&A transactions that we've seen just in the past 3 years, like-for-like periods. And what you've seen is that in the last year, there's been a dramatic rise in the number of M&A transactions. So there's an increasing number and sources of money out there for brands interested in investing in growth. And these changes have enabled and have opened the door for new wave brands to do some really big things. And there's lots of brands that I could have featured here, but a few just to call out are really high growth dynamic brands. Health-Ade is around a $58 million, they'd like to be $58 billion, $58 million brand, and maybe they will be when they're growing at a rate of around 170%. Versus a year ago. Ripple has really disrupted that plant-based milk space. Again, it's a $31 million brand growing at a rate of around 161%. Spindrift. I can remember the first time I bought Spindrift was at a little shop in Brooklyn years ago, and I was like, wow, this is really going to fundamentally change things. And sure enough, like Spindrift is about a $17 million brand today. It's growing at a rate around 114%. And when you look at that, what's going on behind these brands, just take a look at sort of this growth curve in terms of absolute growth of Health-Ade Kombucha. On the top, you have the rolling 52-week absolute growth of Health-Ade Kombucha. That's a pretty darn impressive growth curve for Health-Ade. And on the bottom, you have a map of the line shows the ACV, and the bars show the average number of items. And one of the interesting things is that you can see that as Health-Ade has expanded in the conventional channel, they've accelerated their growth dramatically. But they've been doing that actually with a pretty similar, consistent number number of items. They're doing it off of their core set of items. If you take a look at a similar picture for Spindrift, again, super impressive rolling 52-week absolute growth for Spindrift, continuing to accelerate. And one of the interesting things is, again, you see like average number of items, which are the bars on this chart, have been relatively flat, right? So Spindrift is growing again off of those core items. And again, you're seeing steady distribution growth. From Spindrift, which is translating into that dynamic growth for the brand. But again, they're doing it off of not sort of churning out lots and lots of items, but by growing distribution. And then thirdly, let's just take a look at the similar picture for Ripple. Again, consistent, really amazing growth curve in terms of absolute growth dollars. And one of the things that I wanted to pull out here for Ripple is that there historically has been this belief that when you're a brand starting out and you're trying to drive trial, that the only way to do that is by spending a ton on promo dollars, on your trade spend, right? And no one likes to spend a lot of dollars on trade spend unless you're a retailer. And so, there's been this like drive toward, people think you have to do this. But the reality is that look at the percent of dollars on promo, which is the chart on the bottom for Ripple here. Percent of dollars sold on promo has actually declined steadily as Ripple has accelerated growth. Now, what that means is that probably the absolute dollars have continued to grow, but as a percent of dollars, they're spending less dollars on promo. Now, it doesn't mean they're not investing behind the brand. I'm sure they are, and I'm sure they're investing in a lot of spaces to drive trial and growth of this brand. But promo dollars don't have to be the only way to do that. And in fact, some of the smartest brands are figuring out the ways to optimize those dollars, because promo dollars can be incredibly valuable when they're optimized and done in the right way. So to summarize, what we're seeing is that there's really a new wave of beverage out there, and they're crafting a new path to growth. And to do that, they're really writing a new playbook. So they're embracing the fact that consumers are not repertoire drinkers, they're portfolio drinkers. So if consumers are portfolio drinkers, you should own a distinctive role in your consumer's life and in their basket. So think back to that map of the millennial on my team and think about what is the unique spot in the day and in the basket of that consumer that you are going to own, and be a part of that portfolio. You don't have to own their entire repertoire, own a piece of their portfolio. The second piece is if diversity sparks desire, focus on the points that make you unique. It's not about sort of replicating and trying to be something to everybody, but stand out for what you are and what makes you unique, and that's been a key to success. And then the third thing is that if there's more than one bank in town, then turn smart capital. Find smart capital that's out there, capital that's going to work with you, that's going to allow you to apply smart spend. And what I mean by smart spend is it's finding and optimizing those dollars to make those dollars work for you. Don't just follow the traditional playbook that has been followed for years and years. Find ways to optimize that spend and channel it into the vehicles that are going to deliver the most growth for your brand. So fundamentally, there's a new playbook out there, and that's why I'm so excited about the new wave of beverage, because it means that it's opening the door to less consolidation and a broader range of choices for consumers, and a broader opportunity for entrepreneurs to grow exciting new brands in the beverage space. Thanks a lot for having me.
That was great. We have a few minutes for questions. Over here. Thank you. So if anyone in the audience has any questions, just a reminder, you can send them to us, ask@BevNET.com, or tweet them using the hashtag BevNET Live. We've got about 4 minutes here. I wanted to say, it was such an important part of your presentation. You said consumers are portfolio drinkers, not repertoire drinkers. Can you sort of define what you mean by portfolio drinkers?
Yeah, I mean, what I mean by portfolio drinkers is that there's just a broader array of beverages that go into their basket, and they're more choiceful about when they're consuming those beverages, and sort of mixing it up a lot more. So, repertoire used to be that you would sort of go from the same beverage to the same beverage to the same beverage to the same beverage throughout the day for a lot of different occasions, and you might have 2 to 3 beverages in your overall sort of repertoire. But today's beverage consumer is has a much broader portfolio. They're sort of thinking they're having an entire sort of stock market in their basket, and so they're choosing lots of different beverages and mixing them up at different times of the day. As a great example of that, one of the people on my team talks about the fact that at certain times they want sort of the quick hit jolt pick me up of coffee, and at other times they want sort of the smoother pick me up of yerba mate from Guayaki. So there's a different choicefulness in the way that consumers are approaching their beverages and being much more fine-tuned in when they choose different types of beverage through the day.
So what you're saying is that brands should be a little bit more aware of that day part usage, that usage occasion, and further define it for the consumer?
Yeah, further define it for the consumer, and also sort of fit in with embrace the fact that they're going to have a specific place in the consumer's life, and frankly, we may be in a place where the ceiling for brands is lower than it was in the past, in the sense that there will be a lot more brands with a lower ceiling, because every beverage is not going to become sort of ubiquitous in a consumer's life. There's going to be a lot more mixing and matching of beverages. So beverages just have to understand the fact that they're going to play a certain role in a certain niche in the consumer's beverage portfolio.
You're an experienced market research executive. I'm curious, when you said that you saw Spindrift for the first time in Brooklyn, you just knew it was going to be a hit. You knew it was going to be a game changer. What about that brand really stood out for you?
Oh, well, this was in the days, when I first saw it, I was struck by the fact that there were a few things that I saw emerging on the forefront. One is the fact that consumers were going to be stepping away from sugar in a big way. I was struck by the fact that I saw throughout Brooklyn, I saw parents who were not giving their kids CSDs and were telling them that those are things that they were never supposed to drink, things like that. And so I was like, this is fundamentally changing things. So sugar was going away, but I was like, people still like bubbles and people still like taste. And so when I saw Spindrift, and I thought, this is like the perfect combination, because it's giving consumers that taste. It's based on natural ingredients. It's giving them bubbles. It's like ticking all the boxes of what a new modern beverage should be. And Spindrift has effectively sort of grown and reinvented itself over time. I mean, from those days, it was a glass bottle. It was a different beverage when it first came out. They've evolved and taken that path and grown a bit to address the way that the market has moved. But it was a totally modern beverage, totally right for where I saw the market going in those days. That, and the other one was at the time was Health Aid. I saw Health Aid, in the local bodega, and was like, these two are going to be fundamental game changers. I wish I had been able to invest in those days.
Well done. We had a couple questions about whether or not the decks and Andrew's presentation will be available. Yes, it will be. We're going to send all the presentations from the entire conference to you. It'll happen within a couple days of the conference itself. Andrew, thank you so much. That was fantastic. Really appreciate it.
My pleasure.